Good morning, everybody. Hope you all had a great weekend. Well, all-time highs have to be knocking on the door. There's nothing to stop this. Doesn't mean it won't stall, but if it doesn't go up there, something's wrong, because that's what the charts say at this point. I have no idea what could possibly stop it, but I can tell you it should not stop. And so the old high obviously is the target. This is what we call the power of the void, where this had this momentum move down, and it made the lower high and lower low, which suggested it could go lower. And I did speak about the possibility of a buy setup failure, which did not set up, and it didn't trigger, so no harm being done. That's often what happens historically when you get a run like this on whatever the time frame is. I'm showing you the weekly chart, but typically when you get a run like this and then a shallow pullback, you get one of two things. You get a buy setup that failure, or, well, actually, let's say three things. The most likely things are, after a run like this, or either a buy setup failure or an M top. So while this strength now suggests it's going to go up and make new all-time highs, we're looking at the NASDAQ futures here. We'll look at other markets as we always do. But just to review what we went over last week was, after the big nasty red day on the Trump tweet, that certainly suggested it was going to pull back. And then it didn't. Rather, it went sideways and right at resistance. And then this 180 bullish 180 reversal said it's going up. So this turned out to be bullish price action. The depth of retracement up here was positive, but when you get a big red candle like that, you got to respect it, even after a retracement of this kind. And the weekly time frame wasn't out of the woods. Now we've got this move up, and it's a significant gap up. So, here at the open, it could be a little tricky. I much would have preferred a gap down today, meaning a small gap down into Friday's range, something minor, up in the upper 50% of that range and jiggling around. And from a point of view of getting on board today, that would have been ideal versus now dealing with a gap up of this size, which we'll see on when we look at the Qs. That being said, it's got room to go higher. Let's scroll this back a little bit. And you could see the move down, that momentum move down. So the whole concept of a void, and you can see this bottoming pattern here that played out in the congestion, this whippy price action that occurred at resistance. And now that it's cleared that, it's not unusual for momentum pick up as it did. Now, 1200 should be a stopping point as a big whole number, but there's nothing to the left. And you see when it falls like this, there's nothing to trade against, meaning where am I going to put my sell order here other than whatever might form intraday if I'm trading these intraday? There's nothing to the left here. There's no swing highs. There's no base. So in essence, it's kind of the same as saying new all-time highs, because the whole idea behind new all-time highs is that there's no resistance. And that's the same thing here. There's no resistance here. There's no price resistance. There's the fake news of fib extensions and waves and VWAPs and who knows whatever type of BS some brilliant mind comes up with to show where there's some hidden values that they can sell you. So there's nothing there. That doesn't mean it's got to go there. So the other concept is creating resistance, and that's what something we'll be looking out for this week. Can it create resistance? How does that happen? Well, it can form in intraday easily. It can form an M top and then begin to drop. But looking at today, well, as we go into this is a current bar, but going in today, we always look at, the prior bar's low as the first reference point of support. Now, the fact that this bar is growing and expanding in range, we have to look at the prior bar's high as support. And you can see my green line moving there, and you can across the hourly chart. That's where it broke out above that resistance area, and that should become support. Now, it really should never even come close to there once it picks up this kind of momentum. It should stay in the upper half of this current bar. And this is where the theoretical, I guess in part, those that say, well, half of the gap fill will be a place to be buying. I kind of get that. They come up with, a theory of, well, there's air there, but half of the gap fill will be support. Well, maybe. So what you would look for on your intraday charts, well, so looking at the futures, we can see these areas of support here. We look, somebody that gets their measuring stick out there and says 50%. Well, we look over to the left there and we see there's some congestion. That becomes an obvious place where buyers could show up. So all of that ebb and flow out of the way, that happened intraday, right? Unless this turns into a topping tail, it says it's going up here. So let's just look at the Qs to look at the gap. And so it's up at 291-ish, 291-ish. So it's gapped above this reference point that we talked about last week. And there's nothing to stop it, right? Same story. There's nothing to stop it. 300, the whole number. So as this plays out this week, and I guess into next week as we get into the election, all right, the M top is something that we'll be looking for, or whether it just explodes higher. On what? I don't know. Who wins the election? In my personal opinion, God help us if it's Sleepy Joe into next year. But the M top situation is something that we'll be looking for, because the internals at that time will support that. Breadth is already at a bearish extreme. Sentiment, right, today, we'll see where it ends, will push up into that extreme, and then we just wait for the pattern to form. Once the internals tell us that, the internals will tell us that, it's at an extreme, and watch out, because historically there's going to be a correction, and then we wait for the price action to confirm it. Tony's asking me today, Q's short-term bearish, long-term bullish. No, it doesn't have to be bearish today. The gap up will bring in sellers that held over the weekend, Tony. There's no doubt of that. But so when they appear, let's just stick this up here. Our job will be to see how far they can push things down. So let's put this at 291. Right? Went up to 291 and a half, right, give or take. So that's a pretty big gap. So what we want to do, like I said, the top of this bar now becomes support. Now, it's created some support. You can, well, here's the top of the bar, but, just somewhere in between here, as we look at the futures, if we look at the data overnight, we look at the futures, somewhere in the middle of that bar is where buyers should want to step up. Now, what's to the left? Well, somewhere around here, right? Just like 11,800, right? There's another whole number, 11,800. 11,800. I really shouldn't come all the way back down there. That's more than half the bar. So as we look at the futures, I'm kind of guessing there should be buyers around here as it gets closer to 11,900 or so, somewhere in here where these overlapping bars are, right there. So we'll see. I'll be watching this. We'll see if it comes down here and supports. After a run like this, we're not going to be jumping on board buying at the open, but we'll see how much supply comes in that could knock it down. Mike's saying this doesn't make any sense with the economy so bad. Well, in retrospect, Mike, maybe it didn't make any sense for the market to go down on people getting coronavirus. Maybe it didn't make any sense for the government to shut down the economy. And the whole thing maybe didn't make any sense. And other countries saying we didn't do anything and we lived through it, whatever. This was created as a disaster here. And sure, people got sick, they died, all of that. And people get sick and die from all kinds of stuff. They don't close down the economy because somebody got cancer or the flu. Anyway, I think based on the market's reaction, collapse and rally, the market, which we could say is a broader, large, brain of knowledge, said that it was an overreaction. And otherwise, if it was truly something so terrible that would have resulted in something terrible into the future, the market, I'd assume, would have went down, continued to go down. Anyway, let's see what's here today, where it gets too late. S&Ps, all right, moving up, not as much as the Qs, but the same story. They got room to go up. You've got support down here. And so at the end of the day, from a daily chart time frame point of view, this should not become a red bar. And even if it does, it might pull back a little bit, but that is not going to negate this pattern. It would take something much bigger than even just one red bar to negate this pattern. Now that it's started making this fluid move to the upside. I don't know. None of us know what's going to happen, but this just might explode to the upside now that it's started this move. We'll see. We only know what the past was and what the present is. Then the reality of what is the moment is right on the chart for us all to figure it out. All right. So this has room to go up. We know where support is. We know the patterns. We know it's a little extended short term. Let's see what happens. I mean, blow-off moves are blow-off moves. And, they just go against, rational, logical thinking of, what should based on the past. And that's what creates the void down. And it's what creates the void going up, if that's what's going to happen. So SPX today, well, there's nothing to stop it. So I don't know, as far away as possible as you can get to the upside, I would say, and down below, I would say Friday's low, because it in no way should it go down there. So, I'm just kind of guessing it's up here somewhere. Down below Friday's low should be a line of defense. Below that, there's a gap, so there's really nothing to stop it. You've got, this base that formed on Friday. I don't know if I want to, I don't personally want to get that close to say a 3470. So you've got that line of defense, and then you've got a second line of defense being Friday's low. So anywhere down in this area should be your safe zone. And to the upside, it's, look, I say inconceivable because that's just rational thinking, but I think inconceivable based on the gap up that it could get through 3560 today. So look at the premiums, see how far away you can get, and that's what you do. All right, let's continue here. YM is lagging. Right. This is the line that we looked at on Friday, and it hasn't been able to get above that. So this is the one showing relative weakness. If we do get some weakness, and we're thinking, I might think to short. I mean, it's got this congestion here, so it's not an ideal pattern on the 60-minute chart for it to start breaking down because it's got all these reference points to the left to stop it. So probably not going to do anything, but if this can play catch up, it'd be a much better choice on the long side. I just don't think that that's going to happen at the open. It's going to take a little while for it to digest this morning's gap up. And so the news, if you're looking at the news, as I looked quickly, it was more comments about hopes for stimulus. So that being the case, and last week's reaction on Trump's tweet about no negotiation, which obviously he must be backpedaling on that to some extent here, that the market's going up. But if he should get, some, hair twisted and come out and say anything about, well, forget about stimulus, you could count on this market cratering based on the reactions that we've seen here so far. And the Russell was the performer last week with the transports, the underperformers playing catch up. And I think the outperformers, which was the Russell and the transports, are likely to be underperformers compared to technology, the Qs, and the S&Ps, which were the underperformers. And now they should play catch up. So this doesn't have much to stop it either. It's basing here, and this one obviously is the most susceptible if any weakness should come in, since it's been basing here for several hours. If it should break down below this low area here, it has got room to start to drop. So I don't know if that'll happen. I just set an alert. Let's see how it plays out. Interesting that bonds are up here, because typically they're going in the opposite direction. So that's a little bit of a different bent than what we normally see. Not that it's negating this current move to the downside, which is getting close to that target area down here, but it started last week. So still looking for that to get down there. Crude oil down a bit, no big deal. I'm just flopping around. Gold moving up. All right. I like this weekly chart. I like the fact that it broke down. A couple of weeks ago, I said, well, that looks lower, but maybe it's a breakdown failure, and it's beginning to form that way. It's not out of the woods yet, but I like that reversal. It's not, I don't think it's going to get through here with ease, but if it can go sideways, and that's the essence of a downside shakeout, is that it comes right back up and it goes sideways at resistance. And then if it can do that and it starts to perk up, you can count on gold going higher. So, and of course, you can look at GDX, the minor ETF. So we'll see how that is shaping up. Silver coming back up off of the low, bit of a harder move to the downside. So it's not even at that resistance yet. All yours, Dan.
All right, thanks. Good morning. Yeah, we're very bloated long. Congratulations, those who took the weekend risk. The charts sure supported higher prices. As you can see, I'm tightening some stops on things just to put some money in the bank. So we have 100% bullish positions, except on this. Where are you? One of these, shoot, I can't find the symbol. One of these tan things, we're short the $23 calls. Yeah, in fact, Jake, relax, buddy. I said, except two. So this, here it is, ICLN. All right, we're short the $23 calls for Friday, so it's still a ways away. Yeah, McGraw, come on, guys. Would you let me do my work? I already sent a Telegram alert, and that's what we're talking about now. Come on, guys, you had too much coffee today. So yes, I don't ignore problems. I'm talking about them right now. So I already sent this out, but I'll give it to you again. That's the answer to your question. That's what I'm going to do with it. It's gapping against us, and that is our approach. Read the 10-12. All right, anything else? Everything else looks fantastic. Just ask me if you have a question about everything else. Otherwise, I'm moving stops. Some things 5-minute low for half, 30-minute low for half. With the big gap ups, it's going to be hard to get into our new longs. We have about 12 positions in each letter. So in the advisory letter, they're 100% on the bullish side. Gappers here. So anything weak today, or anything negative rather, is showing relative weakness. So this had a little breakout failure mix on Thursday, and now it's gapping down. So this is a great call spread candidate. Google here. I said it was a fantastic 0DT put spread candidate. One of you did one for next week, and you asked me, "Hey, Dan, does it look okay to hold for a week?" I said, "Absolutely. That's a beautiful bottom." We did the chart of the week on reverse head and shoulders patterns. And just because there were so many of them, this was the pattern du jour over the last Thursday, Friday, reverse head and shoulder breakout party. And this was one that we did, Amazon. So we have a put spread on that. Baidu, 179. Yeah, you can watch 30-minute high. Yeah, it's a breakout, sure. DDS, bullish gap, but too extended. So I have I mean, my bias would be 30-minute low, short a call spread, just because it's run so much. But I'd rather short weakness. DOYU, 16 bucks, gap and resistance, no pattern. Frog, Jake, I know you were watching this IPO, right? Thursday, we got a bottoming tail. Friday, long-legged doji, but look at today's gap now. So let's put frog on the list. Looks good. The old frog in the blender. All right, tan is the solar. We'll be watching that. Dunking here. This was a beautiful breakout failure up here at the highs, and dunking is the betting site, sports betting, and they've had some weakness with sports teams getting corona and postponing games. Yeah, that's why I got 3 in here that were upgraded. Maybe McGraw, if we close strong, it's oversold here near support. If we get like a 180 reversal, then that would be a put spread candidate. Snow, another recent IPO, got upgraded. 253. Now we had a put spread on this a while back, and we made good money on it, but it got real spready. Spready is I said avoided it. We'll take a look. Maybe we'll see. It's been out a few weeks. We'll see if the options have tightened, and then 30-minute high may be another put spread. Twitter here got an upgrade, but gap and resistance. I have no interest in that. This is what we call a strong churning uptrend. Look at that, gapping up over $6. Wow. I would surely be selling in the strength if I were in that. Pelleter, yeah, there's no pattern though on the daily. If maybe for a day trade, if it holds right here, Cameron, then this would be a buy setup at 50%. But I'm not crazy about the daily. Twilio was in the news. I said they were buying a company. Typically, the acquire or gaps down. So I don't know what else. Whatever, you never. It's hard to trade news per se because you never know what the reasons people are hitting the buy button for. Is it because the broader market is gapping up, or is it because they bought a company, or is it because they said something about earnings? Who the heck knows? And that's why technical analysis, we don't need to worry about it because it's reflecting the sum total of all news. But there's no pattern there, so I'm deleting it. Here's a little bottoming pattern. That's a beautiful bottoming pattern. Look at the volume on this new low. And now we had a big green bar deep into resistance, and now we're gapping up. The only problem is the gap percentage is too big. I would love it to be gapping, I don't know, maybe just $3, because then I got room to run. But right now the gap's too big for me. DPHC, $25. It's gap and resistance. I got no interest, but it's a sloppy buy setup on the weekly. Midley looks like a penny stock toy. It's gapping up huge here pre-market. I have no interest in those things. Red Robin has a nice daily weekly. So I'm not doing anything now with the market gapping up and this up 3 bars, but keep it on the list. IIPR, I think one of you, Alex, in the weekend email was looking at this. You know, put spread idea maybe. Learn another bottoming pattern. So that looks good for a bottoming pattern. Delta Tango, that was yours. McGraw gave me that. So that was a nice, that's your something something bar. But the gap's messing it up. Go-Go, I want to sell a put spread. GDX, gold, Zynga. Zynga's a 1, 2, 3. If the market gets weak for whatever reason, put that on your short watch list. These are all just things from my weekend research. ALT is weak, you know, it's weak. We'll keep an eye on it. Here's another weak one, VIAC. I like this sell setup. Now it's weak also because it's not gapping up with the market. So that's a short idea. Pat K. I don't know why I was like, oh, it's a 1, 2, 3, but I don't like these overlapping green bars here, so I have no interest in that. UPS has been a beast here over the highs. Fizzler, I actually had as a call spread under Thursday's low, so now it's invalidated. Our rule is if something hits the stop before entering, then it's invalid. I see Boeing here weak. In my 15-minute charts, Boeing's a dog. Look at that thing. Hey, Debbie. All right, so Fizzler is invalid. A Workhorse, yeah, I think you're long stock. We did a put spread, but let me look about taking half profits in that also. Hey, Ali.